Ready for a quick trivia? Mary, a BTC enthusiast, has been investing $10 on the first day of every week from January 2017 to August 2022. What do you think her portfolio looks like now? According to CryptoHead's calculator, Mary has made a cumulative return of $11,732 from her $2,920 investment. This strategy employed by Mary is known as dollar cost averaging, or DCA. In this video, we will find out how the strategy works, how it compares to attempting to time the market, and its potential drawbacks. But first things first. What is dollar cost averaging? From the example we've just covered with Mary, we can determine one important thing about the strategy. It involves breaking down and spreading out investments. Instead of Mary investing $2,920 all at once in BTC in 2017, she decided to invest $10 in the digital asset every week. The idea behind this method is that by Mary purchasing smaller amounts over a period of time as opposed to in one go, she is more likely to average out with a better return and reduce the impact of market volatility. Dollar cost averaging has its benefits over attempting to time the market. First, it provides investors with an opportunity of getting the best average price. For instance, since Mary consistently buys Bitcoin weekly, there are times that its value falls and times it rises. She'll therefore get the best prices, worst prices, and everything in between. Of course, Mary's gains may seem significantly less compared to an investor who bought the dip around the same time. For instance, what if another investor, Bob, invested the same amount Mary did in 5 years at once? On January 1st, 2017, one BTC went for around $1,000, and at the time of making this video, it goes for around $23,000. So Bob's $2,920 investment could have grown to around $67,000, which is over 5 times Mary's accumulated amount. This only happened because Bob's timing was perfect. However, this is very difficult to achieve, even for experts. Speaking of timing, let's check out DCA's other benefit. This strategy may alleviate the fear of missing out, or FOMO. It's human nature for anyone to have the fear of being left out. That is why more people tend to buy during bull markets. However, FOMO makes us act on emotions instead of executing a planned-out strategy. It's a double-edged sword, though, as the same emotions tend to play out when investors decide to panic sell their assets once prices plummet since they don't have a particular plan in place. DCA, however, may help investors to remain disciplined, as it usually involves them sticking to and fully executing their plans regardless of prices and market sentiment. That said, DCA has its drawbacks, the most notable one being that investors may end up missing out on massive gains. For instance, if Mary, like Bob, had chosen to go all in at once instead of spreading out her principal, her portfolio could have grown to $67,000 compared to $11,000 using the DCA strategy. Though, like we've mentioned, big profits require timing the market correctly, and even professional investors can't necessarily predict movements of the market. So DCA is a potentially safer way to take advantage of big market dips. Another drawback of DCA, though not as significant, is to do with the fees investors incur on trading platforms. As the strategy involves regularly buying the asset, the cost due to trading will be more. Though DCA is a long-term strategy, so ideally, fees should potentially become small relative to your potential gains over 1, 2, or 5 years and beyond. Keep in mind that DCA is also used in selling, except that you will be pressing the sell button regularly. DCA is a lower risk and lower reward strategy, but may offer the chance of benefiting from market swings. That said, remember that there is never a sure way of investing, especially in the wild crypto market. So despite the fact that you invest in a relatively safe way with dollar cost averaging, you still have no guarantee of a positive return. Also, investors are different in terms of financial goals and how much risk they can stomach. So everyone might have different opinions on different strategies. Well, let us know your opinion on dollar cost averaging in the comments below. Remember to like, subscribe, and follow us on all our socials for future alpha. See ya!